May profits be upon you. My mic is too far from my mouth. Hold on. May profits be upon you. Anyway, we're going to take a look at Swiss franc, Japanese yen, Swiss franc, Japanese yen. First thing we're going to do is look at the RT money meter, which tracks the rate of change over a 15-week period of each individual currency future. All right. And we can see the Swiss last week was ranked at number 3 at minus 460, and is still ranked at number 3. However, slipped a little bit to minus 50. It's kind of neutral, right? And it didn't make for a favorite pair to target, except I'm putting it up against the weakest one. Yen. The yen last week was at minus 10.06. This week, stepping down a little bit more, minus 11.17. Now we got an interest rate coming up this week for the yen. Which one is it? Let me see. We got balance of trade there. Inflation. I know we got. I swore I saw. Am I going crazy here? Yeah, there it goes. Interest rate decision on the 20th, right? So considering that, the Bank of Japan has a policy to keep the yen devalued, and I don't think that policy is going to change anytime soon. And you can see it's been weak against this Swiss. The Swiss has been pretty strong compared to the yen, right? And I don't think that's going to change. So what am I looking at? First, I'm looking at this structure. Hey, it's been bullish. It's been bullish. There's no doubt about that. This is a 4-hour chart. If we look at the daily, we can see it's been quite bullish. All right. The Swiss has been very strong against the yen. All right. And I want you to look at this configuration here. Push up, pull back. We went higher, broke structure to the downside. I love to see that. You know, I love to see that, because after this, after we break structure here, what am I looking for? A return to impulse. That'll be up here, right? This would be the first place I would look, and prices running through that. So I do see price going higher. All right, let's go to the 4-hour, and you can see that with this stretch, excuse me, with this stretch of structure, right? Price came up and we finally broke that low. All right, that would indicate to me that price is heading lower, demonstrating to me that price is heading lower. All right, so I'm looking for a return to impulse. Where would I be looking? Again, I'd be looking up here. Hold on. All right, I'll be looking up here, but price is eating through this supply. All right, this supply, in my estimation, is about to fail. It's gone past the median, the median threshold, the midpoint of this zone of supply. So I believe it's going to fail. Okay, and we're going to go up to this one right here. All right, now I happen to like this one a little bit, but I don't think it's very strong. All right, I'm trying to be nice to it, right? I like it, but it's weak. All right, I think ultimately this one will fail because of the fundamentals in place, because of this structure. Look here. Do you see this? What does that look like to you? Come on. All right, we got an inverted head and shoulders here. All right, price broke the neckline with some nice momentum, and here we go. All right, we've already taken out this area of this supply here. All right, and we're heading higher. I believe this high here is going to be liquidity for price to go further. Okay, this is thin. You know, price formed this zone, a legitimate zone now, a legitimate zone. Okay, leaving behind this fair value gap right here. I'm trying to make an arrow right here. Price filled it, came back, traded right into it, mitigated the zone. and came on down. Do I think we're going to get a similar reaction this time? No. A reaction of some kind, yes, but not to this extent. Maybe we come down to here. Maybe we come down to here because I see a zone here. But what I'm going to do, I would, if I'm you, from a swing trade perspective, what I would do is wait until I see the failure of supply, right? This is going to be used as, that high is going to be used as liquidity. I believe we're going to go higher. And then once we get up here to the midpoint, we'll get a reaction. And then we're going to fly through this, all right? What I would wait to do is wait for price to come back to the demand zone that is left behind, so I can take a high probability trade to the upside. Listen to me, folks, it's going to happen, okay? So I'm just gonna be patient for the high quality trade. You could take a long from here if you like, but I would, if I'm you, I'm taking scalps in and out, all right? Short-term scalps, all right? Because you don't know if price is gonna start doing this number and then do that. You know what I'm saying? You gotta, you know, just look at it. This is a small space from here, from taking this liquidity up here to giving time to react here and then up. All right. I'm looking for price to come back here again and take price up to the high. All right. Just remember, we have the interest rate decision coming up for Bank of Japan. And I'll let you know something else too. This swing low, this swing point here, this higher high, higher low, right? Put a fib on it. What do you get? That is a 50% retracement where we see that inverted head and shoulders, all right? This for me is a reversal pattern, not just a reaction to a zone. All right, this is a reversal pattern. And if it's coming at the 50% after an impulse, and this is in the corrective phase, we're going up. We're going up. And I'm looking at this high as my target for the next week. Yeah, okay. So hope you get something out of this. All right, I hope you get something out of this. All right, if price comes back by, if price pulls down, look for it to not to have a very big pullback. It'll be a short-term, very short-term pullback, I think. All right, from this point, I'm looking for price to continue higher from here. I love that it made this big old doji, rejected from the bottom. The buyers came in and you sort of follow through on the next candle, the next 4-hour candle, with a lot of momentum to the upside, very little wick. This is going to be your target for liquidity. Maybe we come up to the midpoint. All right, maybe we come up to the midpoint, like I said, and then come back here. Zip, zip. Okay, check out the videos that I have on your screen right now. Those are the earlier ones, the ones I put out earlier. And shout out to my man, Super Scalper. All right, I hear you. I appreciate your support there, brother. And Pearly Baker, I appreciate you letting me get back into your good graces for missing out on my my analysis last week. All right, I'll see you in the next video. Thank you.